Good morning, everyone. It's Ben Buckner and Dan Bossy with Ag Resource Company in Chicago. It's August 8th, Friday. We made it through another week. Market so far, if we close right now, within a few pennies of unchanged on last week. But I think the key thing this morning, Dan, is kind of the dead cat bounce has so far kind of failed, and we haven't done anything to heal chart patterns just yet. They still look pretty heavy. There's a lot of resistance above the market, and so lots of things going on. I think, again, like most days, central U.S. weather improved. You can't find a lot of lasting dryness anywhere, and also a lot of geopolitical issues, trade balances. Those are the things we're worried about, especially, again, like on the other side of harvest. So why don't you close out the week and tell us what you see?
Well, Ben, it was a good week. I think the crude oil market had one of its worst weeks looking backwards in months, or for maybe 2025. So maybe that's a headliner here. But you're right. We did see some short covering in the last day and a half. I do call it a dead cat bounce, and I think that's where we're at because I don't think there's been a lot of change in fundamentals. But on Friday, it's always a good time to maybe step back and look at some of the longer term drivers of the grain markets. Yesterday, the USDA did release that the U.S. trade deficit, at least for the first 6 months of 2025, was record large, 28.6 billion. And so with that number in mind, I'm pretty certain that we're going to be looking at an average U.S. trade ag deficit exceeding $55 billion. Now, as you look at this chart, we've highlighted that trade deficit in red along the bottom. But go back over the last 5 decades, we in agriculture has always contributed to the positive nature of trade. And so this has been something ongoing. The U.S. always, of course, exports more than we import. We are seeing horticultural products coming in from Mexico. But, part of the Trump platform on trade is to change this around. Now, this has been ongoing for a few years. I think it's important to the U.S. farmer because as we look at what's happened really over the same time frame, notice how the U.S.'s share of global grain trade has been in decline. This is a graphic of corn, wheat, soybeans, and soybean meal. Notice that we're now down to somewhere in the vicinity of 17 or 18%. Yes, stable in the last couple of years, but this has been a constant decline. So when I first got in this business a long time ago, 1979, the U.S. accounted for nearly 50% of global ag trade. All I had to do was get the U.S. balance sheets right. Today, it's much more complex than that, and U.S. farmers struggle with that environment. And as you look at this, again, I'm not seeing any improvement in U.S. ag trade, at least as it sits today. But this really throws into the front light, if you will, whether or not China is going to be returning as a significant buyer of U.S. soybeans this fall. Without that, this trade volume will continue to slip. And I'm very, very worried, again, sorry for harping on this, that China will not be returning, and that has big implications for U.S. agriculture. When you look even longer term and you think about what grain, this is world meat grain volume, trade volume, if you will, in terms of consumption. And you can see here that, again, the grain markets have not kept up with animal proteins. And so as the world population has expanded, we have seen episodes in which biofuel increases due to grain have caused bumps in trade. That is right now still a little bit occurring with what's going on in Brazil. But notice that blue line, how animal protein has become so much more important. So we've been coining the last 2 or 3 years, the years of protein. We still believe that to be the case. We think the story is in animal protein trade and pricing and opportunity. So none of that's changed. I'm not telling anybody to go out and buy the cattle market this morning at record highs because volatility is going to be extreme. And if we don't see cash cattle trade at least $2 or $3 higher this week, we'll see a sharp break. But that being said, I do want you to understand the landscape in the background that is going to be generally bullish of protein, animal protein, for an extended period of time. As you also think forward, the week behind us did provide some drier weather, which was desperately needed across sections of Iowa, particularly eastern and southeastern Iowa, Wisconsin, Illinois, maybe not so much in Michigan. But if you look at the past week's rainfall, it has occurred across the northern plains, the southeast United States, including the Carolinas, with some scattered showers across the southern and central plains. We in the Midwest have been dry. So what I'm saying is 7 to 9 or 10 days of dry weather are helpful. It helps crops root down. I think the market and the crop size has benefited from this dry weather, but we will need rain in the week coming forward. as we look at the forecast for the week ahead, this is the QP 7-day rainfall forecast on your right. We think the rains start later today, Friday evening, stretch all the way into the middle of next week. There could be some areas of localized flooding across northeast Illinois, maybe eastern Iowa, but we do believe this rain will be beneficial in terms of yield prospects for U.S. crops. Now, I would like more rain in places like Oklahoma or Arkansas, but those are the only areas that are going to be thirsty for rain as we get beyond the next 5 to 7 days. Also, this morning's weather forecast was cooler, so not as much heat as that ridge of high pressure stays anchored across the southwest U.S. So we're not certain what tropical storms will do to the pattern from a 11 to 15-day period, but it's looking good at least as it sits today. So I kind of want to finish up the week here talking about when do markets bottom? What's going to take here to really get a bottom in these markets? Well, if you think back, it's really going to be the size of the 2025 corn, sorghum, and soybean crops. We think at Ag Resource, this is a very special crop. We think this has records domiciled around it. If you look at the NVDI, we are record high for corn and soybeans as of today. We think this gives us a big yield coming up next Tuesday, and likely we won't know how big is big until we get NASA in the fields in either September or October. So that's when how big is big, or what sheer crop size will be known. We also can look at where weekly exports are going to be important. So I believe that demand has been substantial, but I fear that we could be slowing that demand looking forward. So we'll watch export sales weekly, but it takes that to suggest that there's going to be significant importer buyers of soybeans, and particularly from China, that will be the case. So when do we see evidence of expanding world trade? Well, that will be evidenced in terms of the vessel counts and pace analysis, also in weeks and months to come. So this is a process. This is not 1 week of big sales. This is not finding out that China's not here 1 week or not the next. This is going to be something that we, Ben and I, will talk about going forward. And lastly, we are ending the comment period for the RVO, which will end today. Will the Trump administration give us indications that we're part of the homegrown energy solution, or are we going to be part of the what I call the big green lie? So SREs and the 45Z program details will likely be out for October. That will give us some evidence of what this administration's really commitment to biofuels and growth in that sector of the ag industry will be important. So with that, Ben, I wanted to go through some longer term stuff, but I do believe as we go forward that those kind of fundamentals are going to be important. Number one, what's the size of the crop? Number two, will China buy U.S. soybeans? I'm becoming more pessimistic about that. And then are we part of that homegrown energy solution?
Yeah, that's exactly correct. In like context, China still has yet to buy on a known basis 1 bushel of soybeans from the U.S. for new crop delivery. I think you're right in terms of like the timing of the bottom, or at least, we've all seen the very, very high yield estimates, and our eyes and ears will be open to, the reality of things, but you got to put those to bed first. NASA has to tell us that those are not correct before I think you see any lasting support. Otherwise, competition, not seeing any real major climate threats in the Southern Hemisphere just yet. So there's still lots to work through. So be prepared to manage risk properly. And again, we'll be starting our crop tour next week. $1 gets you in to get all that information. So stay tuned for that. Wish you everyone a pleasant weekend. All the best in the market today. And we'll be back on Monday with more info. Thanks.